Hey, Colorado Springs. This is Jenny Bayless, and I am going to have today's podcast be about some news articles that I've been seeing recently regarding Colorado Springs, either rental rates or trends, or just some key points that I've been finding to be kind of interesting and I've been keeping an eye on. I wanted to give everyone a couple of these news bites because as buy and hold investors, I feel like the purchase and sale trends are, they're important. They're a part of the story. But if you're just kind of looking to maintain and manage your rental property and not looking to transact, I think that we also need to focus on the rental rate side of things and kind of understand where the market's going for that. So I just wanted to note that the links to these articles will be in the show notes. You can read them, on your own as well. But the first article that we're going to talk about is called Colorado Springs Apartment Market Likely to be Overbuilt. And this was written by Amanda Miller Luciano from the Colorado Springs Business Journal. The key points to this article is that about 12,000 units have broken ground and are expecting to be delivered over the next 2 to 3 years. And 8,100 more apartment units are planned that have not broken ground. There are about 55,000 units in the current inventory. So 12,000 plus 8,000. If all 20,000 units end up being delivered, that's a 40% increase in the next 2 to 4 years over our city's current 55,000 units in current inventory. So kind of just to reiterate that there are currently 55,000 apartment units in the Colorado Springs market inventory and 20,000 are being planned to be built. That is a huge increase. So just kind of, keep that in the back of your mind. Also, the article states that apartment vacancy went from about 6.5% vacancy rate in Q4 2022 to about 7.5% vacancy rate Q1 2023. And they were saying in the article that experts project that at about that 8% vacancy rate is the tipping point for where you start to see rent declines. So we're almost there. So that is really, really interesting to keep an eye on. And the article also points out that kind of as we're seeing across the US, that floating rate debt that a lot of commercial projects locked into over the last couple of years may also cause some trouble in the multifamily market locally as well. Of course, that's more unknown. Not a lot of people know kind of how that's going to play out. So just another aspect to keep an eye on. And then finally, the last major key point that I took from this article is that the author highlights that the absorption rate is historically at 2,000 units a year. And there's concern over how that absorption rate is going to look when there's 20,000 new apartments over the next 2 to 4 years if everything else comes to fruition. So, what's that going to do to vacancy, which then in turn, what's that going to do to rent rates across these apartments? So kind of my comments on this article, I found it very interesting. I'm also equally curious to see how this is going to play out. But just in terms of, our clients here at Envision, we don't have many clients that are purchasing luxury apartments. That is usually reserved for like deep pocket type investors, our mom and pop clients, including myself, that purchase multifamily. We're typically renting those units at below the median rental rate per unit. Whereas these large scale development projects are like loaded with amenities, like way above the median rental rate. So, I've been asked by clients if I see that as an issue, but I don't really see the units that are being built to be in competition with the units that I own or that our clients own. And maybe the type of product that might be more kind of in the middle of the typical fourplex that we buy versus these luxury units downtown. The that middle type of product may be more squeezed if those luxury units end up having to come down in rental price. And then another comment I would have to that is, just for example, I have a single family home that is right across the street from two like really, really large new build apartment complexes. One is already complete and has been for a couple of years now. And then one is in the middle of being constructed. I mean, it's just absolutely huge, fancy apartment building. But I've had a lot of attraction. I had a turnover earlier this year. I had a ton of people very interested in my single family home, that I said is right across the street from these other properties. So, I guess in theory, it would be a competitor. But it has no amenities compared to the apartment. It's just a cute little detached home with a little fenced in yard. But because it was detached, you don't have people on either side of you. It has that yard for a dog. A lot of people were very interested in this property. So, find properties that offer something unique that an apartment cannot. Just, inherently, an apartment is attached to other apartments. So, if you can get a detached home that is attractive to some people, especially if they have pets. So, just kind of thinking, how to better protect yourself if there is this overbuilding issue that is being projected. So I just kind of wanted to point that out. And then I'll change my screen over real quick. So this one is called What's Working. Front range rents were mostly flat in April. Here's how they've changed over 4 years. And this was written by Tamara Chuang from the Colorado Sun. And her key points were that over the last 4 years, rents in Denver grew by about 13.8% as of April. And for Colorado Springs, during that same time period, rents grew 29.1%. That is huge. I was really shocked to see, almost that 30% increase in the last 4 years. But then I guess, kind of looking back, just doing a quick eyeball check on our portfolio, yeah, that does seem about in line. Some of our properties that have had turnovers, every year or two. Yeah, we've been able to bump up those rents quite a bit since when we first bought the property. So I thought that was really interesting. I also thought it was interesting that Colorado Springs grew at a faster rate than Denver. I'd be curious to kind of see if that kind of tapers off, at the end of this year. And then also another key point that the article made was that, Denver rents did grow over that 4-year period, but at a slower rate than the average U.S. market, which was 22.6%. So Colorado Springs grew at a faster rate than the U.S. on average. So I thought that was interesting. And then finally, there's a really interesting chart in this article as well that has MSAs within Colorado with employment numbers and salaries. I do have this up right now for those of you that are watching on the YouTube video. But yeah, definitely check the show notes if you're driving or can't look at the moment. I'm not going to sit here and read the numbers and bore everyone with that, but I thought it was really interesting. Um, my comments on this is that I think it's really important to keep in mind the median income when you're developing your real estate strategy. And I try to stay at or below the 3 times rent rule of thumb. Most property managers, most landlords, they try to, have a tenant's requirements be, their income be 30%. Excuse me, I guess the rent burden be 30% of their income. So, I also like renting at the rent rate target, because if I'm at or below the requirements for the median income, I'm probably going to cast the widest net of people being interested in my property. So then I'm able to, from that large net that I have, I'm able to get really qualified applicants to my properties. So, for example, if I have a property that I'm renting for $1,600 a month, 3 times rent is $4,800 a month in income, or about 57,000 a year, which is below the median salary for Colorado Springs, which is about 62,000 a year. So if I'm able to have a property that rents at that, I'm at the median salary, so at or below. If I have a property that I'm renting for $2,500 a month, that requires an annual salary of $90,000 a year to qualify for my property if I'm using the 3 times rent rule. So that's going to be a significantly smaller pool of potential applicants if it's almost 50% more than the median salary in the city. So all I'm trying to say is, when I go to look for, a property, I really like properties that target rent is right at or around either the median rent or, backing into it based on the median salary so that I can attract the most number of people, which then allows me to pick from, highly qualified applications to my property. So I just kind of wanted to highlight that. And, I think there is an attraction to having, maybe a fancier property or something like that, but you're severely limiting your pool of applications. So just kind of keep that in mind if you're going the traditional long-term rental route. So then one more, I guess this isn't necessarily a news article, but it's the rent.com rental market trends in Colorado Springs. So I thought that this was pretty interesting. It was last updated July 5th. Really kind of the key highlights were a 2-bed average rent. A 2-bed unit is up 12% year over year. That seems really, really high to me. But, that's just what this data is reporting here. Again, average rents, it says between $1,085 and $1,685 for a 2-bedroom apartment. They said that the average rent is $1,687. Kind of go back to that comment that I just made. If 1687, I can't do math in my head, but 3 times that, you're right at or about the median income for the city. So that makes a lot of sense. And I think that is a really good target to aim for so that you have that large pool of interested people in your property. And then I thought this was kind of interesting down here. It says how other cities compare to Colorado Springs. Pueblo, I was really surprised that Pueblo 2-bedroom average rent was at $1,645, which was a flat line annual change between this year and last year. So I thought that was really interesting. I know Pueblo is kind of our steady Eddie market down there, but the rent rate for a 2-bedroom apartment was much higher than I was anticipating. So I thought that was really interesting. And then as you can kind of see, this little chart here showing that for 2 beds, and I like to say 2 beds because I feel like that's kind of the most frequent type of product. I wish that they also had 3 beds because a lot of our clients like to have 3-bed units. But for those of you that have the 2-bed, or you can kind of extrapolate based off of that information. October of last year was kind of the high point for average rent for 2 beds, $1,745. If we're looking at, the next highest point, it was last month, June, at $1,687. And then July, which just started at $1,657. So I thought that was really interesting that, kind of all in all, as of right now, rent prices for Colorado Springs are still really strong. Even though, we might be seeing in the future, in the next couple of years, as these apartment units get delivered, rent rates start to decrease. I just kind of wanted to take a little bit of a pulse to see what is happening in the rental market, what's happening, across the city in terms of future outlook and everything. So I will be very, very curious to see if these expected apartment units, if they're going to, be delivered, If the 8,000 that haven't broken ground, are they going to break ground? Of the 12,000 that have broken ground, are they going to continue building? Are they going to press pause? How is the interest rate environment impacting them? So I don't know. It should be interesting over the next couple of years, but just wanted to kind of share these tidbits with everyone. Thanks everyone for listening, and I will see you next time.